All right, welcome everybody. What's up? This is a little stream. It's a little combination of a couple things. It's a combination of a lot of stuff we have already gone over that I noticed to be the biggest struggles that people have when it comes to swing trading, day trading, the whole kit and caboodle. Um, Obviously, it's going to be based for the most part off of the alerts in Honeycomb because I think that's most important, and what people are struggling with is those specific setups. So I'm going to go over that a little, and I'm going to go over day trades a little bit, and I'm going to go over a couple indicators I don't think I've mentioned before that I really like and I think are very important to use trading. I'm only doing this on the Discord. I'm not doing this, and I'm not sharing it on uh, in general on X or anything else. So the biggest questions, and really this comes down to a couple things. First of all, I don't want to go over every single thing in my first Trader's Edge video because I don't want it to become a repeat and problematic. But there are a couple of key terms that I think in that video a lot of people are really kind of missing overall when it comes to how to decide their contracts or what they're going to play. Because we are still in a situation where, for the most part, a few people are improving on this, but for the most part, it doesn't seem to matter how long the trade is expected to play out for or how far out I go on a contract. People take their profits almost immediately, which is never going to work. All right. And let me explain this to you guys. All right. Because a lot of you don't understand how to pick a contract, this and that, those type of things. And I understand that you're learning, but we need to learn before we trade then. If you don't understand what you're looking at with a contract and how to pick those contracts, how are we going to be successful in our trading? I mean, truly. So we've got the meta weekly chart here. All right. And this is a brand new ticker. I'm pulling up something totally new. We haven't used this as an example before. I haven't even checked this before we played it out because we did this with coin. We were able to predict 150% coin moves over the course of 2 years perfectly, and the pullbacks perfectly using these strategies. I think a lot of times in trading, and this is really going to be something that people really, really need to consider when it comes to trading. I think most people in trading really struggle with the fact of, especially people in Discords that are staring at it every day, taking that step back and looking at a trade for what it is. When you really take a step back and you look at a chart like Mara, or you look at a chart like Nvidia or Meta for that example. How long of you guys have been day trading for more than, how many of you have been trading in one way or another for more than 2 years? How many of you still have a position in something like Meta for more than 2 years and caught a trade from $100 to $532 and go, damn, I should have just held Meta stock and walked away? Those type of things. People are so hyper focused on a 1 minute candle, a 15-minute candle, an hourly candle, a trend for the day, that they're missing what you need to be able to do as a trader to have sustainable long-term wealth. And I'm going to and this is going to be one example right here for people that are in the Discord. Anyone that's in the Discord and gets frustrated or says, I can't believe she's holding that still, when I update a swing position that I might have had for a couple months or longer. That's what we should be doing in trading. It shouldn't be about full porting day trades all the time. And I don't even get into any of my spread type strategies or selling calls, selling puts, those type of things, covered calls, because we haven't even gotten to a point where most 90%, 95% of you guys are even comfortable with holding a swing trade the way it should be held. So at that point, we got to get back to the basics and really just make sure you guys get that part down first. So if we go back to Mara, all right, because this is a chart that's setting up, whether it's uptrend or downtrend, this chart looks ready to go, okay? We can see that. We've got a couple major things, particularly, that I'm looking for and I am watching. And the first one is right here. As you can see, the 2024 chart, so I'm back right here is December 18th. Our 2024 chart right here has a point of control right where we're at. Let me make it thicker so you guys can see it. There we go. We are right below the point of control for the whole year, for 6+ months. All right. We always want to be aware of that. Of course, if we look at 2 or 3 years of the chart, that point of control is going to change. And that's understandable. Maybe not. Maybe it'll sit at the same place. Okay, it has changed. But this area we could still see is a major, major high volume area. When we look at this chart right here, right, we're almost right exactly where we're at. That's like one of the highest volume areas of our volume profile all the way through. 1 second. There we go. So that's very important. These are, when people talk about volume shelves, this is the shelf. All right. These are the shelves. That's a shelf right there when people talk about volume shelves. Obviously, this is. And what all the point of control is, in the specific way I use it, is whatever time frame on the chart we are looking at. The point of control is the highest time frame price point. It's not highest volume day. It's not based off of our time of day like this volume is. This is time of day volume down here, okay? That's time of day, what day it is. This is a historical volume. All this. All right. On the side here, this is a price volume. This is how many players are coming to play at specific price points. Very, very important with long-term trading. You're not going to see a volume profile on my chart too much for day trades. Of course, it's pretty important. Yes, pull it up, especially as a newer trader. But when it comes to long-term swing trading, that point of control and those volume shelves are of utmost importance. And we can go back to a chart like Hood, for example, which has been highly successful for us. Okay, and if we pull this chart up, we can see just how important those volume areas were as we went through this chart here, okay? Do you see the areas where we shot through relatively quickly? We knew to anticipate these areas because of the historical volume. So when we started really coming to play on Hood was right about here, okay? And why is that? This is when we really started playing. That was January 2024. We were in Hood in 2023 too. We caught this first breakout. All right. We played all this. We broke up third top with higher highs, meaning we were clearing out all the order imbalance on top of it. But then past that, we knew exactly where we would pick up speed through this process. Okay. As soon as we broke this line right here, I'm going to change the color so you know which line I'm talking about, this yellow line. Once we broke this area, do you see how in here, all right, let me get my drawing. No, it's in this one. You can see how it literally in this area here, how it curves back. And then it pops back out. We can see that, okay? And we can see how it's coming back through here, which means less and less volume came to play at those points. What does that mean? That means that these are areas we expect high volatility, high moves, quick moves, whether it's a rejection or whether it's a continuation on it. You know, it's very abundantly important. And that's the areas where we were going hard into this stock, where you saw me alerting 4-week, 8-week, 12-week, 2-year out, all at the same time. You saw Hood alerted time after time after time after time. Is because the chart was so clean. Why wouldn't we go back to those specific charts? So right here, as we broke this yellow line into this area here, we saw this volume dip. So this was a high volatility area, the liquidity zone. You just shoot through there, okay? But as we came to play again, all right, I've got a lot of stuff on this chart. I use it a lot for teaching because it's actually a beautiful chart technically for teaching. So let me delete a bunch of this. All right. So as we can see where we're at right now, if we look at volume in the what's next complex overall, all right? Then as we shot through here, we made a new high. Right around that $20.50. Oh, didn't mean to do that right here. All right. Cool. So that was our new high. We came up, we came down, we retested this wick. All right, our 1660 infamous wick. Everybody that's been following me knows this wick was like the end-all be-all for continuation. If we held this area right here, we were getting continuation. All right? And we held it. We came down, we retested, and we pushed. And guess what happened? I put out more calls on Hood. For everybody listening that has been in this Discord for quite a while and does attempt to swing trade at least a little bit, I'm going to challenge you to ask how many of you gave up on Hood after the first play or second play and stopped following this chart or never took another entry or rolled their eyes and got so sick of hearing about that specific chart. I would ask you why. Because, you know, the reality is when it comes to a stock like that and a chart like this, why wouldn't you keep going back to the well that's feeding you? Because it's one of the cleanest charts of the year. Why on earth would we not really focus on those type of charts? And we'll get back to Mara, my main point on this. But it's really important to consider why that's happening. So where are we at now? What's next? And this is the weekly chart. This candle today, this week, came back and retested this high. Boom, right here. And here's their test. Boom, right here. What does that tell me? Are we getting ready for our next leg up? Why on earth would I continue to hold partial positions of my 2026, giving up 20, 25%? Things like that. I'll tell you why. That's why right there. Because we're still in the pattern. Higher lows, higher lows, higher lows. And another higher low. So when we break this next area here, okay. Let's wait for the volume profile to catch up. Look at the next area we're in. All right, look at this. No volume. No volume. As we break through this, I do expect 30 to 34 to be our midpoint of the next target right in here. This is my next target, and I will hold a portion of Hood through that due to this incredibly feature of our volume profile and understanding what it means in relation to the chart. And we have a beautiful cup and handle. The handle broke. We're retesting. And, you know, I really sincerely hope that you guys don't, you know, just kind of move on from charts when you get sick of hearing them, or this isn't the chart you want to play anymore, or you're just tired of that ticker. That should never be the way you trade. So back to Mara and my main point of this entire thing about how to take a trade and hold a trade and really figure out what you're doing with the trade. So as you know, we'll go back, we'll rewind for this year, all right? 2024. As you can see here, our volume profile is right where this arrow is. Right where we're at right now. We're at about 1982. It's going to vary a little bit how you have your chart set up, and that's fine. But right where we're at now, right above us, 1982. We lost 5% today, too. That's huge. And that's why we're waiting for confirmation for this trade, because we have lost the volume profile. So, but this trade, as we get it set up, and if it comes to fruition, how do we play this trade? How do we, as a trader, really understand how we want to play this trade? All right. Well, first of all, we know we've got this beautiful wedge. So say our entry is right around 2150 right here. Okay. So that's our entry. From there, how do we figure out our targets, everything else to really understand a short swing versus a long swing trade and really make money on this? Well, you know, someone I used to work with for quite a while says that all the future is the past with the lights on, meaning the past is going to tell us exactly what we want to see in the future. Always. All right. So let's just test that theory a little bit. Let's pull up our old trusty time and our time and movement bar right here. Okay. Oh, it's just our time bar. I need time and movement. Date and price. So let's just measure the last couple really clean moves we've had with Mara. Okay, so this would be one right here. And we could see that in 42 days, we moved 252% on Mara here. Okay, we'll leave them here. We'll grab another one. This is a pretty clean move right here. All right. It's about 4 weeks, so about 27 days, and we moved. Would you look at that? 230%. Oh, didn't mean to do that. Sorry, guys. 230%. It looks like a smaller move, but it's because we're at different price points. Okay. So there's two clean moves. 260% and 230%. Let's check the next one. This was a pretty clean move. Here's our bottom to our top right here. Okay. That was a nice clean move here. So that one's about 150% over the course of 35 days. Next would be this one here. And this one was about 35 days and about 125%. So finally we have this monster move here. So this one was about 85 days and we moved 323%. So that's our historical volume we're looking at. All right, we're looking at this. We want to see historically how long the breakouts are and about how far they actually break. Now, we understand that this break was the bull run. All right, it's this 316. So if we've got a few like this, we would throw out the lowest and the highest. So we're going to throw out this one and we're going to throw out this one. All right, so that leaves us with 150%, 220%, 260%. If we add those together and we divide them up, we're at around 200% or so. Okay, that's where we would be, about a 200% move. And if we look at the length of time, we've got 27 days, 35 days, 41 days. So right around 35 days. So if we do 200% in 35 days, based off of our break here, okay? And I know this sounds crazy, guys. I understand it sounds crazy. All right, so 200%, 35 days. That's literally what this chart has been doing. So that would give us approximately $65 right around there, which we're not at, but we've got to wait for the price to hit that entry. So let's say we hit the entry around the end of July, right here. All right. So say at the end of August, we have a price point of $65. All right. Okay, that's fine. But Amy, that seems excessive. Sure. Yeah, it does seem excessive for sure. So let's split it in half. Let's do 50%. All right. So that would give us even half as like our target. That would give us right around $43 as our price point in approximately 35 days. So if we expect $43 and we expect up to, approximately here, which is a very reasonable target right about here in 45 days. Okay, so if that's our target point and we're getting ready to take those calls, double the amount of days. So 70 days, we would want to go out at least 70 days. And our target point, our price point for these calls would be approximately 2/3 of the move. So we would look for around a $30 to $35, about a $35 to $38 contract. And we want to go out 70, 35 times 2 is 70. Always go one higher. So that would be the $90 calls. We would look for the $90 calls. 90 days out calls. So 3 months out from where we're at now, at the 38-ish area. So we go to the chart and we look. And there's the problem though. So even if we identify all this, all right? And this is where people kind of get caught and really screw themselves because they're putting way too much money into trade. Their exposure is ass backwards. And I'm going to get to that in a second here. So if we take the trade, we expect to take the trade around the beginning of July. So July, August, September, October. All right. So we'd look at October. They don't have October. So we'll go December. We're going to go further out. We always want to give extra, not less. So if we go further out and we look here and our price point is approximately $38. Okay. These spreads are massive, but I'm just pulling these up anyway. All right. And we can see decent interest, 189. The 30 is really great interest. So I would probably do the 30 because the volume's really nice for today and the open interest is fantastic for the 30s. Okay? And a lot of people are like, holy shit, you're 50% out of the money. Yep, I know. Because that's the point of the trade we're taking. We're giving it enough time where it's okay we're going that far out of the money. Because playing close to the money on a day trade and a 0 DTE is much, much different than playing out of the money on a leap. You want to be out of the money on leaps. Because if you're not out of the money on leaps, what is happening? Okay, let's talk about this. Say our trades, I'm trying to follow AmmaJamma swing trades, and if I go back and I look at my last 20 swing trades, the average amount of time I held those swing trades was 4.2 days. All right? But I followed AmmaJamma and took that insanely out of the money strike. Okay, so I still took that 40% or so out of the money contract. And then I'm selling within 4.2 days for, let's say, 15% to 20%. That's our average. Even though we see Amy updating, holding at 80%, 90% the next week. And the next point is we always sell the second we see red. And we've won 70% of our trades. And we're down 35% in 2024. Do you know, you ain't special. Do you know how many people I do one-on-ones with that this is the loose criteria of their swing trading? And why? What happens with that? Why do we get this set up here? I can tell you why. First of all, when you look at the days here, okay? Oh, I didn't mean to turn it all green, but that's okay. So when we look at the 4.2 days, yet, oh, but they're buying. So they're holding for 4.2 days while buying a contract, say 60 days out. That doesn't make sense because what's happening is right here, overexposed, your cash. So you're spending, say, $500 on a trade, all right? So you're risking $500 to make, let's say, 15-20% to make $100. So you've risked $500 to make $100. That's not how it should be. We should be risking $500 to make $1,500. To make the $300. To hold this. So we need this 4.2 days. We need to turn that into, if you're going out, say 90 days. All right. And some trades go sideways, of course. If we break out for 4 days and we pull back and we're break even, cool. We'll try again. The things I don't understand is if you're following my trades, why are you on a trade like this? Because I tell you guys, it's okay if you're not the type of trader to hold that long and you sell pretty quick, that it's okay. But we have one major step to that, because it is okay. If you're the type of trader that's selling within 4 days, A, this is no longer accurate because that's not your price target. B, the bell curve that I always talk about with trading. All right, so let me get my drawing to where is my, there we go. So the bell curve we talk about like this. All right. Then we've got the middle. We've got this, and we've got this. All right. You never, ever, 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 ever want to sell your contracts in this area here. And if you do, you're buying the wrong contracts, because what's happening is if this right here is our full max point. This is max safe trade. Let's say max safe trade, because what that means is it doesn't mean that you can't hold it anymore and make more profits. What it means is there's this point on your contracts where the theta will start to matter more than the delta. Meaning, if the delta starts to slow down, the theta starts to tick up. We end up with this instance of it being much, much harder to sustain that profitability. And for the most part, what max safe trade means is at the midpoint of your trade. So if this trade we expect to be a 90-day trade, we would expect 45 days is going to be the max midpoint of where we would want to at least sell a good chunk of our trade. All right? Because what that means at that point is it means that we are allocating the risk reward profit properly. All right. So, but what's happening is if you're the type of person that you take an entry here, all right, and then 2 days later you're selling here, okay, and that's fine if you're doing that. But what's happening is, where's your stop loss on that? All right? Because what's happening is, especially the further out I go, the further out I'm going on a trade. All right? So if I'm getting September contracts, so here's my expiration. Say I'm getting September right here. Here's my, that's my point I want to end up at. Let me find a little... Hold on, I'm looking for something. Here we go. So that's my goal right there, okay? But for you guys, for some of you, not everybody, your goal is, so I've got, if we look at it like that bell curve, I want to, for the most part, if our entry's right here on July 1st, and here's our endpoint in September, all right, I want to stay on this line, which means I'm going to give it a zone. And I would suggest you guys start doing this with your chart. If my target's $25 and I've got a September 6th contract, make a little line from the entry to the point and then open it up a little bit like that. All right? Even though this is but this is about the math. This is about the probability ratios in your trade. All right? So if you are, let's make this really big here. If you are selling within a couple days over here, and this is pretty wide, we want it like that, all right? So if you're selling somewhere like here, all right, or even here, say we have a great first day, and we're way up here, and you take those profits, you're out right there, all right? You haven't given yourself any clearance to continue this trade, yet your contract is bought for this date. All right? So what really happened here when you do it like that is, so here's your reward bar. All right? Money-wise. And here's your risk bar. This was your risk bar. And on top of it, what's happening is you're asking me 2 days later, right around here, if I'm still holding the trade. Okay? If I'm still holding the trade. Because you're not sure anything going on. So say you even bought earlier. You bought 4 weeks out. Okay? Say you bought August. But right here, you're asking, what are we doing? And I bought September and you bought August. So you have half the time I do on the contracts because you're trying to follow your trading plan. Okay? But what happens is right here, and I know this probably seems so confusing to new traders, but this is very valuable in the grand scheme of things. So what happens at that point there is, all right, I'm only down, say, 21%, and I still have 6 weeks, and you're down 46%, and you have 2 weeks till expiration. Oh my God, am I typing? So while that works, yes, if you know you're a trader that doesn't hold that long, what's happening is, and what I'm seeing a lot is, you're holding too long theta-wise and too deep red-wise, but you're not holding that long on profit-taking wise. All right? So you're letting it come all the way down to here. You know, you're down to here. And the reality is, at best, you're taking profits here. So your risk reward is already screwed on a swing trade. You never want like a 1-to-1 risk reward. Is anyone still with me? Does this make sense? Can I get some comments in the chat? Because I don't know if I'm losing you guys. I'm really trying to explain how you guys can come up with a plan that works for you, for the people that don't hold contracts. Okay, thank you, Based. I appreciate that. Because in my swing trading edge video, I talked about the trader you are. And, you know, picking the contracts that work for you, this and that. And yes, to a point, that is exactly what you need to be doing. But to the same point, that doesn't mean you can hold the trade the same way as I can in that instance, because you're letting your shit go way, way, way too red and asking after the fact if I'm still holding and that type of thing. McDonald's is a perfect example, okay? Because what happened is, when I'm day trading, I cannot monitor swings. And that first day, it popped for like 30%. And then it dumped. And it technically dumped to an area where it should have been cut by all, including me. But I missed that sell. So what happened is, it ended up being a trade that did work out, but it was being rewarded kind of for like a really terrible risk reward. So, all right, so back to the original trade and really coming up with a plan of how we would want to take this trade. All right. Because a lot of you can analyze the charts, this and that, and are still losing on swing trades. And that's really the part to me that's most problematic. Hold on. Because the second part of this is hold on. All right. So we've got this. Now the second part of this, which a lot of traders hate this, and it kind of blows their mind. All right. A couple things that need to be up to you and can never be up to me, and why. 1, what is your entry? Why does it matter? If I put out the contract, that means I just bought it as well. And here's the thing. So on a 0 DT, we'll stay with the swings first. On swings, say my entry was $1.50, but you have a $1,000 account, and I have a $25K account. Let's just say that's what my account is for this particular exercise. All right, and let's say I bought 350 calls, 450 calls for $5. You would never buy that same call for $500, first of all. And second of all, you're going closer to the money as me, closer to the expiration as me. And what that means is, back to our chart here, you know, if our end goal is $27 in September at that flag right there, you know, and I say we would want to be within a couple strikes like that, we would want to be somewhere in the range of 25 to $30 strikes. If our $27 is target, our target's 27, and it's going to depend on your risk appetite. I'm going to give you a range. I'm always going to give you a range, guys, because I don't want anyone going too far on the money. You don't want to get 10-cent contracts. The risk reward doesn't make sense for that. I'm always going to make sure the theta makes sense, so on and so forth. So when I give you a range, what that means is, okay, if I say somewhere between 25 and 30, someone with a 1K account and only holds trades for 5 days should never have the same strike as someone with a 10K account and holds for 30. So you will never, and I'm glad a lot of people on Twitter are starting to be more honest about this. You will never be, I'm going to say it again, you will never be a successful long-term trader if you cannot figure out your trading plan and what works for you. Okay? If my contracts, if I've got $100,000 in my account and I go two strikes closer to the money than you with your account, like these 30s, I said these right here are nice for Mara. Say I get some 28s, or say I go up here to 25 because I've got more money in my account. Does that mean the trade won't work for you? It's a little more risk. But you're risking less money, you know? So that combination is critical. I'm going to give always a range unless there's only like one strike that really makes sense. That's the only time I'll ever not give that full range. All right. So that this part right here, you know, where's my stop loss? That's the part. Let's get into that, because that's really the most important part. Now, first of all, I'm never going to hold a trade down 60-70%. Okay? I'm not going to do it. I'm not holding a swing trade and letting it go that red, obviously. First of all. So back to this. If this is our end goal here, okay? This is like our end game, target zone, and when we expect to hit it right here. All right, in September. And I get contracts, so I get contracts, say November, and here's my contract. So, because we always want to give it double the time. All right, so if the range is $26 September, my exit is going to be right about there. There's my contract, okay? And we talked about this. This is our target range. We want to give it double that time, because as we hit this zone here, it's going to start behaving like this. It's going to kind of like this. Hold on. The contract's going to kind of flatten out like that. So we're not going to have as much nice, juicy profit taking to do. Of course, we could end up here and say this is the price point we end at a month before, and we're way up here. Yes, but this curve line will be more like, it will be more like this. It will start to really kind of droop like that. Okay, and yes, that's possible, of course. All right, so this is where we're at right here. We already know, I've already discussed that we should not be in yet. We should not be in yet. I put this trade idea today. We're below this point of control, everything else. So on a trade like this, okay, we've got our risky and we've got our safer stuff. We know that. So if we get like a daily 15-minute candle in this area here, it could be a little spicy day trade. We know that. Maybe an overnight swing up to our trend line here. I mean, it's a decent trade. We've got what, $20 to $21.40? That's like 7-8%. That's huge. You know? So that's one type of a trade. And then I talk about the other type of a trade. When I do a shorter and a longer term, these are the type of things I'm looking for. All right. What would be obviously my stop loss on this would be much different than my stop loss on the longer term trade. All right. But as far as the stop loss on the longer term trade, if we were taking that entry at the break of like 21.50, right about here. Okay. We've talked about that. As far as ranges for taking profit targets, this and that. And I'm going to be brutally honest when I tell you this, guys. Okay. If you're the type that takes profits immediately, you have to tighten these stop losses insanely tight. So if you're the type of person that sees 25% 3 days later around 22.16, which is right here, okay? If you're that type, and this is where I can't tell you, you have to be honest with yourself. But if you're that type where immediately right here, you're taking profits, all right? Then your stop loss needs to be half that. Your stop loss needs to be that. You must never have your stop loss deeper than where you honestly take profits at. You can't do it. You can't do it, guys. You cannot do it. Because you are setting yourself up, and I'm going to say it again, because you will never be a successful trader if you don't abide by this. If you set yourself up in a way where you have to win 75% of your trades to break even, you will fail. You will fail. And what will happen is you will regress. You will not only fail, you will regress back to full porting your entire full portfolio into day trading and spitting it through it every day. And then going, well, goddamn, I blew up another account. Because I don't fucking wait for confirmation. My risk reward is spun backwards. And then I want to say, I didn't know you sold. You guys, I show up and I'm more accountable and KT as well, than 99.9% of the traders on X. Sorry. So if you want to jump ship here to go to the Discord that says, I took my trade and I entered at $1.32 a contract and we're going to have a 22% stop. That all these people want because they don't like any gray. They want black and white. Guess what happens? Okay? Guess what happens with that? You're going to get stopped out and the next fucking candle's going to be green. That's what happens with that. Because you cannot play a stop percentage, and you cannot play if I don't get the same exact entry bullshit. It doesn't work. And on swing trades, it doesn't fucking matter. If I have 32% profits, you know how many of you have higher profits than me all the time? So anyway, when it comes to these stop losses, if you're the type that, like 8 days later, we're sitting right here, and you say, what are we doing with this trade, Amy? What are we doing with this trade, Amy? If you're that person, and you're also the person that takes profits right here immediately, let's turn that one green. All right, so you're never in a trade for more than 4 days, right there. And you're always taking those profits at 24%. Like, you look back, you can chart all your trades. Yet, you're the same person that 2 weeks into a trade, all right? So you always are taking profits at 4.2 days we talked about. Okay? This is you. But this is also you. 9.5 days in, asking or wondering, what to do. Asking or wondering what to do with 32% trade. And it's not even if you ask. Even if you're the person that'll never ask because you know better, because we're going to tell you, like, what was your trading plan, this, that, the other. But you're still holding them secretly and kind of a little shame to yourself that you did hold it and you didn't work out your plan. So this is your risk bar where you're at already. So your risk bar is already past where you always take profits. And you've already held twice as long as you usually take profits on the way up. And then you go, and then you're like baffled because the following happens next. All right? And what happens after that? AmmaJamma updates the trade 2 days later at back green or slight profits. Okay. But B, AmmaJamma bought 2 months further out than you. AmmaJamma, and she also, what she does is she doesn't cut and sell immediately at 25% every trade. And you can't figure out how I'm making money swing trading and you're getting destroyed. This is how. Because here is me. All right? Worried about, I might take, here's me. I might take, at this green right here, I might trim a third or half. I might trim half right there. Okay. But then, I'm not trimming more until way up here. Here's my next trim. Way up there. All right. And when we add those together, if this is our half trim and then we have it here, so the total risk reward on that technically isn't there. It would be right in between here because I did trim half. So we took a lot off the table. So that would be our reward bar for a half trim at the yellow and then another trim up here. All right. So we'd have to split that because we did trim half. So my risk bar doesn't get to go all the way up here. So that makes me able to have a stop loss bar, maybe the same place as you down here, but I'm at a 1 to 2 risk reward instead of the 3 to 1 you guys are doing. And when we say you guys, it's not everybody. Please know that. But at the same time, no, I never, ever, ever say it's okay to hold swing trades down 50, 60%. No. We want to be in line with what the chart is doing as well. You know, so for like a trade like this, as far as profit-taking zones, you know, our stop losses should never be off of a percent up or down. Yes, but your risk reward bars should be at levels, at profit-taking or sell levels. So like on this trade, all right. So if we take an entry here, and here is a good profit-taking zone here, and it's a chart level, this and that. So if this is our profit-taking zone here for target 1, and then this is target 2 right here, which are zones on the chart, okay, we would know our reward bar is going to be halfway in between those because of the trim. All right. And then we just want to cross-reference that with where we would cut the trade because of loss of trend. So on this one here, okay, if this is our bar, and this one here would be, we would cut immediately at loss of point of control. We have a 2 to 1 risk reward right there. Maybe just under 2 to 1, but it makes sense. So you want to have your profit-taking areas and your risk areas truly have it where it makes sense overall. Oh my God. Can you hear this puppy crying the whole time I'm at the phone? So bad, this dog. It's insane. Sorry, guys. Anyway, do you guys have any questions before I keep going? Because a lot of this is like just so important. And it really, I wish I can like trade it for you in a way, you know? And then, so day trading, let's flip to day trading. All right. So it's a little bit of swings. Again, this is kind of a little extension of our Trader's Edge video, because I think in that video, I noticed the areas where people are still confused. So let's switch to Apple, because that's the day trade I just took. All right, we're actually going to do it on so as far as day trades and what contracts do I take and what's your entry? Let's look at today. Let's put it on the 5 minute. Let's put it on the 1 minute. Just so we can look at the candles here. Oh, speaking of, oh shit, I've got a few contracts left. What are we doing here? Let me see. All right. So in here, all right, so I bought calls right here, okay? This was our call entry. It was, I think, I'm trying to think which can. I think it was here, yeah. No, what time was that? I don't know. Maybe here. Let's just say it was here. It was off the VWAP. All right, yeah, I think it was like right there, okay? So that's where I took calls, right here. And if you're trying to ask me, what's your entry? It doesn't matter. As long as KT or I give you that entry immediately after we take the entry, there's absolutely zero probability of you having the same entry as me. And I'm going to really break this down in specific way to make you guys understand how much it doesn't matter for newer traders. All right. So I took let's say it was the 210s. No, actually it was the 212.50s. All right. Let's look at something here on this chart. All right. 48 cents here. No, you know what? I want a little... Let's do SPY. Everybody trades the damn SPY. All right. Pull up these 545s. Pull up the chart. Okay, so here we go. Here's our SPY. All right. And say, let's just be really honest about this. Say we took a trade anywhere in this day here. All right. Say right here. I took a trade. This candle was my entry candle right here. All right. And you're all so worried about what was my entry. This candle had a range of 73 to 86 cents. That's 13 cents. That's almost an 18% range. Okay. 18% range on this candle. And if you ask me what was your entry, and I say my entry was 79 cents. And it's at 86. I'm going to pass on the trade because it's 10% up already on a 0 DTE that has an 18% range in a 1 minute candle. All right? So you pass at 84 cents. Cool. And you say, I only want to take trades. So let's fast forward to right here. Same exact thing. It's the same setup on the chart. Let's say this candle right here had the same range. Okay? And this is where I'm going to explain to you how fucking important this is for you guys to wrap around your brain. Say same thing right here. I take the entry right here. All right? At 79 cents. Or say it was the next candle. Right here at 79 cents. All right? And you're like, oh, I'm going to take that trade. It doesn't, like they said, it doesn't matter. It doesn't matter that as long as I get it right away. So my entry was 79 cents. All right. And your entry was 87, even 89 right here. Okay. You took it within a minute. So you're in the trade. In the trade, whatever. Say it's like 86 cents right here. All right. Look what happens. You took the trade based on the chart looks great. You cut, you take a trim at $1 and cool. You made 20%. You didn't pass on the trade because my entry was under your entry. So same thing here. I take 79 cents. All right. And you don't want to take the trade because you want my entry. You say, well, use your entry, 79 cents. And you're like, oh, shit. It's at 74 cents. I got a better entry than her. I'm chilling. I got this entry here at 74. Here's the brain flash for all the geniuses out there. If your entry is at or below mine on a day trade, that means the chart is going the wrong way. That means, let me repeat that. If your entry is better than mine on a short-term trade, that means the chart is going the wrong way. It's a bad thing. Does that make sense? It is a bad thing if your entry is better than mine ever. Because it means I'm red, and it means the chart is going opposite of where it should be going. Does that make sense, guys? Cool, you got 74 cents. That means I'm already down, and the chart's going down fast. You don't want that. You want your entry you want my entry to be better than yours. So every time someone asks, what was your entry? That's what I think. Does it matter? Does it matter? I'm going to give you, we give you our trims regardless. We tell you how much we're up regardless. If you're up 58% and I'm up 70%, does it matter? Or would you rather have it be, I'm up 58%. And you're up 44%, or would you rather have it be I'm down 28% and you're down 22%? Which ones of those sound better to you? Being up 44% and me being up more, or you being down 22% and me being down more? I don't know. For me, it sounds way the hell better to be green. So that is 100%. You want our entries after the fact? Fine. You want to know what was my entry? How did I get in that trade? Whatever the hell else? Fine. But if you want that entry as like a component of whether you're going to take the trade or not, peace be with you. You're fucked. If that's how you're trading, you're fucked. Yeah, and I mean, that's really a big basis of what I really wanted to talk about today, is those two things. And as far as the contracts, I can say with 100% assurance for every single person in here, a couple things. First of all, we are always, if it's a day trade, we are always doing weeklies. We are always doing weeklies. All right? If it's a SPY trade, it's user 0 or 1 DT. KT will distinct if it's 3 or more days till expiration for him. He always says. A couple more things. Most of day trades we have in the chat because they move very quickly and everybody talks together. If it's a slower day trade further in the day, they are going to be in my channel. But the first hour, they're going to be in the chat. I always give you the date of expiration, and I give you a range of which contracts are good. Does anyone have any questions? because this is, you know, it's so important, day trading. And this isn't even necessarily about day trading in this Discord and that Trader's Edge. This is about understanding your range of trades on anything, whether it's in the Discord or not. All right. And one thing I promised I would give you guys a little secret. A little secret here. A lot of people probably know this, some might not. So I'm going to give you a little, for all you guys that hung around, I'm going to give you a little day trading tip. All right. Mega cap stocks, this is applicable for. All right, so let's put on the SPY. Let's put on the 5-minute chart. Just a little tip and trick for you. Here. And you guys can back test this theory. Let me get rid of volume profile and put the RSI on. All right. This is my tip and trick for calls. On mega cap calls. So SPY, Amazon, Apple, you know, those type of things. This is a little update that I'm gonna little tip and trick I'm gonna give you. And it's not 50. A lot of people do this at 50. Put a line on your RSI. All right, I'm gonna make it bright pink so it looks different than everything else. No, that pink ain't good. Blue. How about blue? Nope. Let me see a color that really pops. There we go. All right, put a line at the 55 on your 5-minute chart. And anytime you're going to take SPY calls, ever. Oh, I moved the line. Hold on. If you only take your SPY calls above the 55 on the RSI on the 5-minute, you will avoid 90% of your bear traps, or your bull traps, excuse me. Let's just cross test this over a couple days here. All right. So all of this range here, this pink line, all of this range right here, we wouldn't have ended up taking any SPY calls and getting trapped all the way through here. Okay. So we did get a dip here, but it worked out. So we would have taken calls here. But the good thing is it dipped, but it popped back up. And this was actually a really great, because remember, we're on the 5-minute. So we would have taken calls here. We would have taken calls here. So this candle here, we would have taken calls. That would have been our entry. This would have been red. Let me switch this red. There we go. We would have taken calls here. And these are 5 minutes, remember, guys. So these are like really clear entries here. We would have taken calls here. So let me put green boxes. These would have been our call entries according to only taking calls on mega caps when the 5-minute chart breaks over the 55 RSI. Here are our 3 call entry boxes for the day. There, there, there. All right, let's cross test another day. All right, so we would have taken calls, right? And this was a bullish day, so this one's a little easier, of course, but so we've taken the calls here. And obviously those kept running all day. And then we just kind of been in it all day. And then abandoning those calls, all right, at the loss of the 70 RSI. At the loss. Let it break over, but once we lose them, leaving the trades. All right. So we only had 1 entry that day. Oh, let's find another day. Here we go. So on this day, kind of a real shitty, choppy day. Like when would we even want to take calls? So we would have taken calls right here. This candle right here. We would have taken calls here. And this was a super choppy day. And remember, these are 5-minute candles, guys. So this is like a 30-minute push each time. We would have taken calls right here. And this is I love this example because it's an awful choppy day. And these are the candles we would have entered calls on. That one. Here. So this candle right here. Play it all the way up. And then here. So those would have been our 4 call entries. And as we could see, this being a 5-minute chart, we would have made money on all of them. All right. So far we're 5 for 5, 6 for 6, 7, 8, 9. And this one maybe would be a loss right here. Maybe. You could have lost that one. So let's consider that a loss. So right now we are 9 for 10. Let's go back and do a few more days here. All right. We wouldn't taken calls at all this day until right here. So we would have taken calls here. And then here. So that's right there. And then right here. So 3 for 3 that day. I mean, and it's clearly 3 for 3. We can see the uptrend on these. These aren't even like questionable because remember, this is a 5-minute chart. So we had that whole push, and then that whole push if we held in it. So that's 12 for 13. I'm going to do a couple more days. So we would have taken them here. Oh, my line got disappeared. Hold on. All right. And then here. So 2 for 2. All right. Anyway, you guys get the drift. Just a little, that's a little sneaky little alpha for you just because you guys hung around so long. Thanks, you guys. Love y'all. Bye.